Money is shifting faster than most people can keep up with, and 2026 is shaping up to be a year where smart decisions could make a bigger difference than ever before. Some investments that looked safe just a few months ago are starting to lose strength, while new opportunities are rising quietly but powerfully in the background. The market is changing direction, and anyone who pays attention now has a chance to stay ahead instead of falling behind. This year isn't just about choosing what to buy, it's about understanding where the money is moving, what risks are growing, and which trends are strong enough to last. Some sectors are heating up with real potential, while others are flashing early warning signs that many investors are ignoring. If you want to make sharper choices in 2026, this is the moment to watch closely, because the decisions you make now could shape your financial results for years to come. 1. The sectors expected to lead the market in 2026. As we move toward 2026, several sectors are showing very strong signs of growth, and investors around the world are paying close attention. One of the biggest leaders is artificial intelligence, which continues to change the way businesses work. AI tools are becoming smarter, faster, and more useful in almost every industry, from healthcare to finance to customer service. This makes AI a major area of interest for investors. Another strong sector is renewable energy. Countries are investing heavily in cleaner power sources like solar, wind, and hydropower. As energy costs rise and climate rules become stricter, companies in the renewable space are expected to grow even faster. Biotech is another exciting area. With rapid advancements in medicine, gene editing, and disease prevention, biotech companies are gaining attention for their potential to solve major global problems. Cybersecurity is also becoming crucial, especially as online threats increase and businesses depend more on digital systems. Companies that protect data and prevent cyber attacks are expected to expand quickly. Lastly, automation, including robots, smart machines, and automated factories, is becoming more common as companies look for ways to reduce cost and increase speed. These sectors stand out because they solve real problems and offer long-term value, making them important areas to watch in 2026. 2. The safe, steady investments that still matter. Even though fast-moving trends and new technologies often take the spotlight, safe and steady investments still play a very important role. Many smart investors continue to rely on index funds, ETFs, bonds, and dividend stocks because they help reduce risk while offering long-term stability. Index funds and ETFs are popular because they spread money across many companies instead of putting everything into one place. This lowers the chance of big losses and creates a more balanced portfolio. These investments may not grow as fast as risky assets, but they provide consistent progress over time. Bonds are another key choice for people who want safety. When you buy a bond, you are basically lending money to a company or government, and they repay you with interest. This makes bonds more predictable and dependable, especially during uncertain years. Dividend stocks are also important because they pay investors regularly. This means you earn money even if the stock price does not move much. These steady investments help protect your wealth when markets become volatile. They also create a strong foundation that supports higher-risk investments. In 2026, with market changes and global uncertainty, these safe assets remain essential. They offer peace of mind and stable growth, making them a smart part of any long-term investment strategy. 3. High-risk areas to avoid or approach carefully. Not every part of the market is moving in a positive direction, and some areas carry more risk than reward. One major concern is outdated technology. Companies that fail to innovate or fall behind in new trends may struggle to survive. Investors must be careful with businesses that rely on old systems or outdated products because they may lose value quickly. Another risky area is overvalued companies. These are companies with stock prices much higher than their true worth. When a company becomes overhyped, its price can fall sharply once excitement fades or earnings drop. Some industries are also struggling due to high debt. Companies that owe too much money may face pressure when interest rates rise or when sales slow down. This makes them more likely to fail or lose investor trust. In addition, sectors with heavy regulation can face sudden changes that hurt profits. For example, industries like tobacco, outdated energy sources, or certain large tech companies may experience legal challenges or policy restrictions. Another area to watch is businesses depending too much on temporary trends. If a trend fades, these companies may lose customers quickly. In 2026, it is important to approach these risky areas with caution. Doing good research, understanding market conditions, and avoiding emotional decisions can help investors protect their money from sudden drops in unstable sectors. 4. Where global money is moving and why it matters worldwide. Large amounts of money are shifting into new markets and new technologies, and understanding these movements can help investors make better choices. One of the biggest factors shaping global investment is interest rates. When interest rates rise, borrowing becomes more expensive, and some businesses slow down. When rates fall, investments usually increase because companies can grow more easily. This movement controls where big investors place their money. Another key factor is international partnerships. Countries are forming new trade deals and working together on technology, energy, and infrastructure. These partnerships open new opportunities and guide money toward regions that offer strong growth. New technologies are also pulling global investment. Areas such as AI, renewable energy, robotics, and advanced healthcare attract money because they promise long-term value. Governments in many countries are also creating policy changes, such as tax benefits, investment programs, or stricter climate rules. These shifts encourage investors to move their capital into certain industries. For example, many countries are investing heavily in clean energy, digital privacy, and advanced manufacturing. Global money is moving toward places that offer stability, innovation, and future growth. Understanding these trends helps investors stay ahead, choose stronger markets, and recognize where big opportunities may rise in 2026. 5. The new opportunities growing quietly in the background. While most people focus on popular industries, several new opportunities are rising quietly and could grow very fast in 2026. One of these is digital health, which includes apps, online doctors, wearable devices, and remote medical tools. As healthcare becomes more digital, these technologies offer faster service and better data, making them attractive for future investment. Another exciting area is space technology. Companies exploring satellites, space communication, and even space travel are slowly building strong foundations. As technology improves, this sector has the potential to grow in surprising ways. Robotics for daily use is also becoming more common. We already see robots helping with cleaning, delivery, and simple tasks. In the coming years, robots may assist in homes, warehouses, and small businesses. This makes robotics a hidden but powerful growth area. Another sector to watch is advanced agriculture. With rising food demand and climate challenges, new farming technologies, such as vertical farms, smart sensors, and automated harvesting, could become essential. These fields may not get as much attention as AI or energy, but they are developing quietly in the background. When they finally expand, they may offer some of the biggest opportunities for investors. Paying attention to these early-stage industries can help people get ahead of the next wave of growth in 2026. As we wrap up, remember that the right investments in 2026 will come from staying informed, thinking long-term, and choosing strategies that match your goals. If you found this helpful, please hit the like button and don't forget to subscribe for more valuable insights. Take a moment to reflect on the key points we explored today: emerging sectors, safe assets, global trends, and smart wealth strategies. There's much more to uncover, and in the next videos, we'll explore even deeper opportunities you won't want to miss.